Gold prices doing slightly better this Monday after the dust settled following Friday's jobs report. We'll be asking our good friend Peter Hugg what we can expect from the markets this week on For Pete's Sake, coming up right now. Joining me as always now is Peter Hugg, Director of Precious Metals for Kitco Metals. Peter, always a good Monday when I see you.
Nice to see you too, Daniela.
All right, Peter. So can we expect more choppiness from this market this week? What are you looking at for the gold market?
Well, I still think we're stuck in a range. Last week it failed to break up through 1620, came back down. Held Friday at 1580, which was the bottom line of the support band, and I think we're going to be range-bound until there's more headline news coming out.
So more frustration for both the bulls and the bears?
Yeah, we're in the summer, enjoy your barbecues, and I think the fall is going to be extremely volatile, and I do see the metals prices going much higher over the fall and into next year. But between now and September, unless there's a major headline story, I don't see much happening.
All right, so U.S. dollar performing extremely well following the news on Friday. Mm-hmm. Some analysts I've spoken to have said, well, look, it's just basically the best of the best option right now. Do you agree with that?
Yeah, I do. I think, you had the euro finally, the Europeans finally dropping their interest rates, which they haven't done in the last 5 meetings. And so there was some safe haven movement into the dollar. You had the unemployment rate in the United States only come out with 80,000 new jobs. And that also indicates that, the recovery is still moving along, although tepid in the United States, but much better than what's happening in Europe. So the movement is into the dollar from the euro.
Right, Peter. You would think that with the news out of Europe, coupled with the jobs report, which weren't that rosy, people expected a much better picture, that gold would be performing well, should be the perfect storm, but it's just not.
Well, I think the Europeans, again, they have a game plan. Now it's a matter of seeing if they can execute that plan. And as far as the U.S. goes, the jobs data wasn't bad enough to make the Fed move immediately. I think that's still in people's minds, and that will be the support level for the market. As long as the economy in the U.S. drags along, there is a chance the Fed may act before the election. Right. I don't think they will, but it's possible, and that's causing the shorts to panic, and that's why the market's so volatile between the ranges.
Right, that's in line with what other analysts are telling me. They don't expect much until the election. But let's look at that news coming out of China last night. China's consumer price inflation dropping to its lowest level in 2 years. How might that impact the markets?
Well, I think the Chinese are going to try to stimulate their economy, but again, that'll take some time. I think the world right now is deleveraging, and until the deleveraging process is over, which could take a while, I think you're going to have a situation where deflation is more of a concern than inflation, and as such, that's why the industrial metals, I think, are taking it much harder than gold from a selling point of view.
Right. So is price deflation one of the biggest enemies of the metals markets, Peter?
Well, if you have price deflation and you have industrial metals, the demand for those industrial metals will drop, and when demand drops, the price will drop. Gold has a bit of it does have industrial demand, but at the same time, it's a psychological investment, and people are less likely to short gold than they are the industrial metals.
Peter, let's talk silver now. Following the FOMC meeting, some were saying that silver was the hardest hit out of all the metals. Do you agree with that?
Yeah, I mean, it's obvious. I mean, if you just look at the ratio and the percentage drop on silver compared to where gold dropped after the FOMC meeting, it's plain as day that silver dropped approximately 20% more on a ratio basis than gold did. And again, because the economies are slowing, it's an industrial metal, and unless the investor steps in here, and I don't think that'll happen until the fall, there is a chance silver could break on the downside. But 26, 27 has been significant support for silver. It's bounced off that 3 times. And unless it breaks 26, 27, I think we stay in a range with upside potential coming in the fall.
Peter, what a difference a summer makes, right? Last year was just rock and roll, which I believe you told me you hadn't seen that type of activity in years last year. But this summer is just proving to be another quiet one.
Well, I've been in the business since '73. I've never seen a summer that's been busy except last year. And first you had silver in April, which obviously is still spring, but move up to a high of $50. And then gold went up to $19.27 in August. And I think that was because that was the first signs that Europe was in serious trouble. Everybody assumed that this was all talk and maybe just Greece that was in trouble. But when the picture got a little clearer that Europe generally was in trouble, movement went into the gold market.
All right, Peter. So just recap it for everyone out there for this week, please.
Well, I think you trade the range. This has been a great market for traders. You buy 1580, you sell 1620, and it's been an easy trade for traders. I want to bring to the attention of people that are investors in precious metals that they should read John Nadler's article. Read the end of it today. He makes an excellent point on recalibrating your portfolio and keeping your percentage allocation consistent when the markets go up and down. It's worth the read.
Well, on that note, I know you also have a commentary on Kitco.com this week where you kind of recap your experience over the market. So I would like to invite everyone to check that out as well.
Great. Thanks, Daniel. Yeah, I mean, basically, since I've been in the business in 76, I just sort of did a psychological profile on what motivates a buyer of precious metals, and I hope it's of interest to our readers.
All right. Thanks so much, Peter, and we'll see you next week.
Okay, you're welcome. Thank you.
Thanks for watching this edition of For Pete's Sake. You can email both myself and Peter at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambote.